it's Amber Kavard with Guild Mortgage. I wanted to get you a quick update because we're fielding a lot of questions right now about the future of the interest rate market, the future of the housing market. So I wanted to let you know we're seeing a lot of volatility in interest rates right now. We're seeing big swings. Just last week, we saw a day where the market moved 100 basis points in one day. It was a 0.25% worsening in interest rates in just that short period of time. Why are we seeing this volatility? It's all about inflation. I want to give you a quick analogy. Let's say we're driving down the highway and the Fed is at the wheel. They tap the brakes, the Fed hikes, and a month later they look at the inflation reports and they see that the car is still moving faster. So they tap the brakes again, more Fed hikes. A month later they look at the inflation reports and see the car is still moving faster, inflation is going up. So they tap the brakes again, a little harder this time. Their sweat is coming, their heart rate is beating, the car is still moving faster. They're tapping the brakes again. This is the cycle that we're in right now. And until the investors see that the brakes are working, that the car is slowing down, the inflation rate is coming down, we're gonna see volatility in interest rates. The inflation target is 2% and we're sitting around 8%. So we have a long ways to go. But I do believe that as soon as we see a few months of good news on the inflation rate coming down, we're likely to see a rally in the bond market, which is going to cause interest rates to come down. Whether that's later this year or early next year, the timing is unknown. But what I do know is that it is a great time to buy a house. The other thing we're hearing a lot of is the market crashing? What's happening with interest rates? We are not seeing a market crash. We are seeing a correction. We have an unprecedented growth, unsustainable growth the last couple of years, and we need a little bit of pullback because we want a healthy market. I want to remind you that real estate is a long-term investment. What you want to do is find a home that you love, plan to live in it for a few years, and even if prices do come down a little bit, which there's no guarantee that's going to happen, reminder that it's a paper loss, and in 12 to 24 months, we should see that come back plus some due to the demand in the housing market. What is that demand in the housing market? We have a lot of it. One is that the average age of someone forming a household and buying a home is between 28 and 32. We have the largest population of humans in that age range than ever before. That's going to put a huge demand on the housing market. The second thing we have is we're still short about 4 million housing units to support our population. And thirdly, Americans have a lot more flexibility in some cases with their jobs and working remote, and it's creating new needs within housing. So the future of our housing market looks really bright, and right now we have a window where buyers have a little bit more power and we have more options to make homeownership affordable. So if you or someone you know is considering a home purchase, we would love to have a conversation to educate you on what the options look like in today's mortgage landscape. Anything that we can do for you, please don't hesitate to let us know. Thanks so much.